All right, for some of you that have been with me for a while now, and they have been with me since the beginning of the year, for the analysis on dollar index. Now, why am I even referring to that? Because it's a risk on, risk off barometer. It tells me if I'm likely to see continued upside going long in ES, or if I'm likely to see continued weakness in ES. And also it kind of contributes to, as you'll learn throughout this year, when I'm expecting consolidation, choppiness, things that might be conflicting in analysis, that means that I'm going to be looking for a lot lower degree of participation with risk. So in other words, if I'm not looking for a really clean one-sided run, then I'll trade very, very small intraday scalps, not try to capture the entire morning session run or the entire daily run or even a large portion of the weekly range. So I'm using this indicator, whether if I'm doing analysis with the forex market, if I'm doing it with the bond market, if I'm doing it with equities and index futures. Okay, so all of my analysis, every bit of my analysis starts with this instrument here, because it helps me frame the logic of whether I should be a trader that's assuming risk. That means buying foreign currencies or buying stock. And if that's the case, then I'm assuming that it's risk on, and that would be a lower dollar. We were looking for a lower dollar at the beginning of the year. If you go back and look at the analysis videos that's on my YouTube channel and follow all the commentary on the tweets that I've posted on my Twitter account. I know there's a lot of it, but for those that have been here, this is old hat to you, but I'm counseling you not to take my word for it because it's going to look like it's hindsight here. But everything I'm going to talk about here was talked about beforehand. So it's kind of like a benchmark where we were, where we are now, and where we're likely to go to next. So it kind of gives you like a full circle perspective on what I'm seeing or expecting. We were looking for lower prices, sell side liquidity. That was absolutely tagged. And then I said if we went below that, we have an order block and we have a fair value gap in here. If you look at the range, and I promise I'll be very, very quick through this because I want to be in front of the charts live at 8:30. So half of this gap between this candle's high and this candle's low, that's a buy side imbalance, sell side inefficiency with an order block. So the order block is the down close candle. Why is that an order block? Because it has a fair value gap. Price has moved away from it. So if it comes back down and retrades back into this candle here, we're going to see some kind of what? Reaction. Does it mean it's the ultimate low and the dollar never sees any lower prices? No. It just means that it's going to be a strong draw on price when price is above it, as it was in the beginning of the year here. Moved lower. We use the fair value gap here as resistance. Okay. Drops lower, digs into the sell side liquidity. Throughout this year, you're going to see that while many folks that come to my work, they're going to say, or you'll hear other people say, ICT complicates things. I'm not complicating it. I'm just giving you a deep understanding about what it is available in terms of trading price action. Throughout this year, in live sessions and ongoing teachings, you're going to see that it's absolutely simple. It's very simple. We're only looking for one of two things. Is price going higher? Okay, if it's going higher, is it going to go above an old singular high, a swing high, or relative equal highs? Because above highs is going to be buy side liquidity. Or is it going to go lower? If it's going to go lower, is it going to go down below a single swing low or below relative equal lows? So multiple lows or a singular low. Below those lows is sell side liquidity. Now, if I'm bullish and we have a imbalance, what's an imbalance? Something like this and like that. And I'm bearish, like I was in the beginning on dollar, it's going to draw to those levels. So I had 2 points of interest where I had the sell side here, and I said once we go below that, it could dig into this imbalance in this order block. Go back and watch the videos. It's in January's commentaries. Can't edit it, can't change it. what I want to take your attention to is the fact that we went right down to the middle point of that gap, which is consequent encroachment. Whenever there's an imbalance, whether it be buy-side imbalance, sell-side inefficiency, which is what this is here, it is a fair value gap by a category. Within that category is classified as a buy-side imbalance, sell-side inefficiency, or BISI, B-I-S-I. You'll see that used a lot in my charts. A lot of my students have their charts annotated like that as well. There's 3 levels. Okay, this is what I argue all the time when people just casually watch my content or my concepts. They'll say it's supply and demand. It has absolutely nothing to do with supply and demand. It's 3 specific price levels that I'm looking for. The actual high, which is going to be framed by this candle's low. So this gap or fair value gap is framed with this specific price level, the middle, which is consequent encroachment, and then the low. The low is the less likely price objective. So the 2 most primary levels when you're above it, trading down into it, it's going to be the high of that gap and as much as the midpoint. Look at the reaction there. You see that right there? That's undeniable. Okay. Also notice that I was framing shorts on S&P last week because we had traded down into this imbalance. I apologize. I got this new headset I'm using. It's sliding all around my head. The reaction here on dollar, this rally up into this imbalance here, and we don't know yet because really we haven't really opened up and moved around a lot so far tonight and into this morning's trading session. So I'm not going to have a whole lot of this is what's going to happen at 9:30. I have to wait to see what we do at 9:30. So, and you'll understand where and how I get that logic, where you'll be able to do it once we're not doing this anymore next year and you're doing it independently without me. When you're looking at your charts, you'll know what procedures to follow and what not to worry about and what things you need to be focusing on. But we've traded up in this area here. So as it stands right now, the market has already posted a risk off scenario where dollar is going higher. That means foreign currencies are likely to go lower and or has gone lower, or equities like stock indices and stocks individually, they'll see temporary weakness against this rally in a dollar. So if you get shorting opportunities in like the S&P and your charts are communicating that there's a potential low resistance liquidity run, again, if you don't know what that is, you'll be seeing a lot of that throughout this year. That's what I'm teaching primarily to focus on. There's going to be a lot of gyrations in price action that are going to be of no importance to me, and you'll probably see them today in the future live streams where you'll question, why didn't you take that trade? It's not my setup. That's not the one I'm interested in. You might see it. So don't look at whatever I call, talk, or outline in price action. Don't let it discourage you from following a model you may have already adopted that's helping you in finding setups. I'm not here to try to twist anyone's arm. I'm here just simply communicating to the folks that are new. This is how you go in and you start learning how to read the tape before you even press a demo account, before you even do any of that stuff. These are the things you're supposed to be doing. And it's going to seem boring, especially for seasoned traders that are already profitable. It's not going to be as exciting or helpful to you. But as we go further into this year, you'll see there's going to be a whole lot more engagement. But in the beginning, there has to be a foundation. So the market has already traded up for the dollar into this area here. I like the idea of it trading up into the midpoint of this up close candle, which is a bearish order block, the midpoint of an order block, which has nothing to do with the depth of market or level 2 data. Half of that candle is mean threshold. So half of a gap, like down here, is consequent encroachment. Half of a order block, whether it be the last up close candle prior to a displacement lower with a fair value gap, that's what makes this a bearish order block. Not simply because it's the last up close candle before a down move. There has to be signatures, an alignment that agree. And the midpoint of that candle is mean threshold. It means it's likely to draw up to this candle and as much as the midpoint. Now, what I'm interested in seeing is, do we trade through the mean threshold? Because if we do, I've had this annotated here. And while it was a volume imbalance initially here, failed it here. So now what's above these relative equal highs? Buy side liquidity. So buy side liquidity with a small little gap right there between this candle's high and that candle's low. So there's a potential draw for dollar to get up to here. I'm not stating unequivocally that it's going to go there. I'm watching to see throughout this week, do we see signs that it wants to continuously press up into this area? If it does, that means we have potential, not a guarantee, potential for lower prices in forex, stocks, and stock averages. So that's where my focus is today. I want to see, do we get more indications that that's probable, or are we going to hit this fair value gap complete closure here? And let me draw this out so you can see. So we have just a little bit left in there. And I want to watch and see, do we get a reaction and start to sell off a little bit? And if we do sell off, how far can it go? We have a breaker here. We have a low, high, lower low. So that up close candle in here, it can trade down as far as that, which would be around the 102.30 to 102.55-ish. Those two specific price levels. So that's what I'm looking for dollar, and the relationships between what levels and why I expect to see either one potentially drawn to. I don't have a right now, this is what's going to do. We haven't seen a whole lot of movement overnight. We don't really have any heavy news. We have an 8:30, some kind of week report in terms of, in my opinion, but we could get a little bit of movement in about 11 minutes. Real quickly, I want to just touch on Euro. All right, so Euro, I mentioned also at the beginning of the year that we were going to draw up into these relative equal highs for the buy side, and if it gets above that, we could trade up into this fair value gap. Again, go back and watch the videos. The body's respected perfectly. Look at that. The close and the open on this candle, and after running up into that SIBI. It's a fair value gap by classification, but specifically it's a sell side imbalance, buy side inefficiency, meaning that it only delivered price on the downside. So how does the market algorithmically rebalance and reprice this range? It has to do what? Deliver it on the upside. So it trades up into it, offers that buy side that was inefficient over here, and then we have the market displace lower. So we took out a short-term swing low here. I like the idea of that. We traded down into a buy side imbalance, sell side inefficiency here. So this is a fair value gap too, this singular candle. And we could dig down a little bit further, just like we mentioned on the dollar. It has a little bit more upside to fill in its gap. Doesn't mean much in terms of opportunity. It just means that's where my focus is. Just because we're sitting in front of the charts and we have time to be in front of the charts and the markets are trading doesn't mean, oh, I got time. The charts are printing candlesticks, so therefore let's take a trade. That's gambling. So there has to be something for me to lean on logically to frame a condition that would be hopefully high probability. I only want to encourage you to focus on those types of opportunities. There's a plethora of opportunities intraday that are not really good risk, well, framed with real good risk reward models. Not that I'm a big fan of risk to reward, because I think it's a fallacy. You don't know if your trade's going to pan out that much, and you don't know if your stop loss is going to get hit. So no one knows that. So you might look to trade with a specific risk model, 5 to 1, 10 to 1, 3 to 1, but going into this industry thinking that you're always going to get what you're setting your trade up for is a fallacy. You have no control once you enter the marketplace. So I'm going to be teaching you, hopefully, to ferret out these opportunities where price action can deliver with the highest degree of probability, reaching from one level to the next. Notice I didn't say I'm going to put you in winning trades. That's a stark contrast to what I'm trying to do here. I'm trying to teach you how to read price. If you're here to try to keep score or something like that, that's not what this is. I have other live streams that I'll do things. I'll showcase stuff. Here, it's lectures, teaching, getting down to the brass tacks of what you're supposed to be doing before you even press a demo account using the things I'm teaching on my channel. Okay, so that way, hopefully I've communicated that clearly. It's not meant for you to follow along and press a live trade. Don't try to trade your funded account with the things I'm going to say today and any future live stream. Okay, it's very important that you understand that. Today also marks the day where I'm not replying or hearting or liking any post on Twitter. It is now just a medium for me to alert you if there's something that's got my attention, and I'm not live streaming. I'm going to bring something to your attention there. I don't care to know what your responses are. I don't care if you like it. I don't care if you don't like it. Don't communicate to me through it because I'm not reading any of it. My attention is dialed in on the markets for now. And between now and the second Friday of November, it's all work, no play. Cable, real quick, we'll just take a quick look at this one. This one was unable to make a higher high. Before I transition to cable, look at the higher highs being posted here up into its fair value gap for euro over here. And then look at cable. Weak, really weak. So we had this imbalance here. I wanted to see it run above, take buy side. It failed to do so. It looks likely that we'll get down into this sell side here. If we accelerate through this, be mindful that we have this area over here, which since cable's already posted weakness comparatively to the euro. If one were to consider if we see acceleration on the upside for dollar, again, that's risk off. Higher dollar is lower prices for foreign currencies and likely lower for stock indices, equities, and index futures. So if we take out this low, it could, if dollar accelerates to the upside, we could see cable draw down into this imbalance here.